Welcome back. I'm Pratap here. Today is 18th September 2024. In this video, I'm going to evaluate the performance of the high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts. Some of you might be seeing the tab community. Whichever the tab you see, there you click on the tab, but then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You need to start our training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at the Telegram channel. Now let's get into the analysis discussion. Yesterday we identified 6 high liquidity zones from daily and 75 minutes time frames. The first one we got the trade, successful trade is from Balrampur Chini Mills Limited. Already yesterday I have explained how I fine-tuned this zone, but this is also having an aggressive 5-minute zone which we didn't draw in our yesterday analysis discussion. The reason is today morning price action we got the clue. So let me directly go to the 5 minutes time frame. See here today morning prices went, this is morning 10:30 candle, and up to this near to the zone it went and then again it came down. So what could be the reason? The moment you look into the chart in the 5 minutes time frame, we are seeing a zone here, 5-minute zone. We have a drop, 2 base candles and a drop candle. But I fine-tuned up to the first base candle. The reason is it is within the zone. You can also draw up to here like this. Till this level also you can fine tune exactly within the high liquidity zone. And see today morning near to the zone prices went and sharply it came down and then again started moving up. But why you might be having a doubt why I further fine tuned a little above rather than exactly within the zone. I moved the order flow up to this first base candle. What is the reason? The reason is very simple, for the risk management point of view. There is no other reason. I want to achieve the RR, at least 1:3 RR. So the moment I fine tuned up to this first base candle level, exactly I am able to achieve 1:3 RR till the 15 minutes target zone from here. So this is the reason why exactly I fine tuned. And this is the candle indicating a strong rejection from this area. That is indicating in this area there is a very strong order flow. If prices can reach up to this fine-tuned area, we will be able to get 1:3 RR. We have 1:3 RR is there exactly 1:3.05. That means 1:3 RR. And where is the target zone? The 15 minutes target zone. Here we have a 15-minute zone, a rally base rally. So some of you may say, why you didn't draw again here? This is a rally, this is a base candle, this is again a rally candle, you may say. So this is a medium size base candle. That could be one reason. This is also because the volatility is very high today. So this is a medium size candle. This is also I am feeling like medium size candle. This is another ERC candle, failed ERC, another medium size candles. So that is the reason why I couldn't conveyance, and another reason is the orders are picked up from this zone and this entire movie started. So that way I realized this is the exact 15-minute zone we need to fine tune. So always you need to calculate. See, from here prices are started moving up. Prices moved up and again prices came, once again it is moved. So this is the exact area, and this attempt, maybe this is violated, that is a different story, but we have find this could be our target. After reaching the target, the zone is violated and again it moved up. Probably here this is a drop base rally, probably might be having a strong order flow. So all these reasons could be because of this zone. But here we exited exactly here in this candle. First of all, in which candle we got the trade? Let me go to the 5 minutes time frame. So we got the trade at 12 o'clock 40 minutes candle, and then when it reached the target, 13:30 minutes candle. That means within 1 hour the trade is completed. In less than an hour the trade is completed. How much profit we got? So let me open the Excel sheet. So Balrampur Chini has given a 10,160 rupees profit, which is a 4.1% ROI. This is a 5 minutes aggressive trade in daily high liquidity zone. The reason is price action clue rejection, what we have seen in this particular chart. This rejection gave a clue. When this rejection is formed today morning at 10 o'clock, prices came near to the zone and came down. By seeing the rejection, the moment I looked into this chart, what could be the reason? So this is the 5 minutes zone, which is part of the high liquidity supply zone, daily high liquidity supply zone. Actually that has given a very big push here. Okay, so this is about Balrampur Chini. Next one is sale. Sale is a 75 minutes high liquidity zone. I already explained how I fine-tuned this zone on Monday HLQ analysis video. We discussed about sale. This is a 75 minutes high liquidity zone. So let me open in 75 minutes. Okay. So here in the 75 minutes time frame, we have a rally. We have a rally, 2 base candles and a rally. And already we fine-tuned this zone. I already explained in Monday HLQ analysis, but still let us see. Here we have a rally, base, rally, or we have a drop, base, rally. Either way you can draw the zone. And within this 15 minutes, again we fine-tuned with this 5-minute zone. And in Monday HLQ analysis, I clearly told you this 5-minute zone is a high liquidity zone. This is a high liquidity zone. See here we have this fine-tuned 5-minute zone is a high liquidity zone, and this, because it is a high liquidity zone, yesterday prices reached to this fine-tuned 5-minute zone. This fine-tuned 5-minute zone is a high liquidity, 5 minutes high liquidity zone. This is a support demand zone. See, second time, this is the first test already, it picked up the orders and moved. And yesterday again from this zone it picked up the orders and again it gave a move. And today also it picked up the orders and again moved. But here the interesting thing is, when prices are entering here, this was supposed to be our target. Let me show you the 15 minutes time frame. At the time of reaching this zone, this leg out candle is not completed. It is still under process. That's why we may not be recognizing this 15-minute zone. Maybe it looks like a leg out, prices are coming into this, but the 15 minutes time is not completed. Many times what happened, it picked up the order and very sharply it will move. That at the time this may not be a leg out candle. Let us assume, okay, today it closed here. Now a new supply zone is confirmed, but before that prices entered. It looks like a leg out, still another 5 minutes time is there. Within that 5 minutes, sharply it would have gone up. It could have gone up. We don't know, anything will happen. If that is the case, this is not a 5-minute zone, this is not a 15 minutes leg out candle. Many times we have seen it picked up the order and immediately sharply it will go. a strong rejection will be there. But today it didn't happen to this stock. So that was the reason why before prices are entering into this zone, this is what we planned. We have a drop, 1, 2, 3, 4, 5 base candles, and then again a drop candle. And another ERC candle, follow through candle. And from this particular 5-minute zone till this 15-minute zone, the target zone, 1:3 RR is there. Around 1:3.3 RR is there. So it's a valid trade. That's why we took the trade. But unfortunately, what happened? After we took the entry, after 5 minutes, this 15 minutes candle is completed. Prices didn't move sharply. So it resulted in a new 15-minute supply zone. This is the ERC candle. We have 3 base candles. We have a drop candle. That means our target is changed now. We can't expect prices to reach. If prices wants to reach our initially planned target, this newly created supply zone has to be violated. We don't know it will violate, or this supply zone further will push and this entire 5-minute zone, fine-tuned high liquidity zone, and together with 15-minute zone might be violated. Anything will happen. Today this entire thing is violated. So that is the reason why what you have to do, you need to revise our target. Maybe you are not achieving 1:3 RR, but you have to compromise whatever the profit you get. With that you need to compromise. There is no other option. Because always I tell markets are dynamic. Because of the dynamic, many times the targets will change. When the targets are changed, immediately you need to exit at the new target. Whatever you achieve profit with that, maybe you may achieve only 1:1 RR, or you may achieve 1:5 RR, or you may achieve 1:2 RR, whichever it is. You have to exit. That's it. Whatever the small profit you get, you have to feel happy with that, because market is dynamic. New target is created. At the new target, you have to exit. Several times I told this point. Previously also, few days back, I have explained a video why many recommendations will fail. I already kept that video in the important analysis playlist. We have a playlist, important analysis and strategies playlist. I have added that video in that playlist. Even training videos playlist also added that, because that is such an important. Why many recommendations? Because some people are asking. Provide recommendations, provide recommendations. Recommendations doesn't work. Which will work? Your subject will work, your knowledge will work. That's what your subject I explained. A new supply zone, that should be the new target. That is what I explained in your training earlier. Exactly. Whatever I explained in your subject, accordingly we planned, we exited at the newly created. See, whatever, even though minimal profit, still we got. See, profit even 500 rupees is a good profit. Even 100 rupees is also a profit. Maybe it may not be good profit, but profit is a profit. That is what you have to understand. How we are able to, why we are able to change this new target? Because we learned supply demand zone price action concept. Why I want everybody to become independent traders? This is the reason. See, if I give recommendation, you will be keep on thinking, okay, this new target prices will reach, and you will be waiting. Prices moved up and again turned, and finally it is violated. See, today your stop loss would have been executed if you would not have exited at the new target. Because you learned the subject, instead of getting the loss, we got the profit. Maybe a small profit, but profit is a profit. Otherwise, you would have lost some money today. Maybe the money what you are losing is a small money only. But we avoided that. Instead of that, we got the profit. The reason is market is a dynamic. When a new zones are created, accordingly we revise our targets. At the time of we planned, we have 1:3 RR, we planned the trade. But during the middle of the trade execution, because the market is dynamic, a new 15-minute zone is created, and immediately what we did, we revised the target. The moment price reached the revised target, we exited. That way we got the profit. Okay, next, after that again prices reached here. Generally what we do in high liquidity zones, every time when it reaches the 5 minutes high liquidity zone, we will be taking a new trade until it is violated. Okay, here you exited, again prices came. Do you take this trade? This is a question to you. See here, this is the first test here. Let me go to the 5 minutes time frame. See, after this high liquidity zone is created, this was the first test. After that, prices started moving. And yesterday it was second test. 5 minutes high liquidity. Again prices started moving up. And today it is the third test. Again we took the trade and it reached the revised target. And again today we got another test. This is the fourth test. Do you take your trade? Definitely you should plan for the trade. I am not saying you should take the trade. You should plan for the trade. Until high liquidity zones are violated, we don't know how many times it will give trades. Maybe it could give another successful trade. Who knows? Maybe once again it will come. Maybe another successful trade. Once again it will come another successful trade. So that is the reason why, until the high liquidity zone is violated, whatever the number of times it provides the opportunity, we have to take. Especially the fine-tuned 5-minute zone is a high liquidity zone. We can take multiple trades. So my question is, because one more time prices came, can we plan a trade? Do we accept this trade? First, we have to, whether you accept or not, that is a different story. You have to plan for the trade. Planning is different, accepting is different. While planning, if all the conditions are in your favor, then you accept the trade. If the conditions are not in your favor, you reject the trade. Okay, you plan for the trade. What is the revised target? This is the new 15-minute zone. This could be your target. Now what you do before you plan your trade, you will be looking for RR. How much RR you are getting? 1:7 RR you are getting. So do you accept the trade? No, you don't accept, because RR is not there. That way you reject the trade. Some people, what they do, they further go in depth until it reach 1:3 RR. Maybe at the time they can plan a trade. See, this is the way. In case prices wants to come here, you want to plan a trade. Those who took a trade here, probably your trade is stopped out. See here. But because you reduced your risk, in case if it is failed, because anyway it stopped out, your risk is very small, you get a very small loss. You get a very small loss. In case, or those who feel, because you want to believe exactly at here you want to take a trade, because RR is not there, those people will reject. Those who want to further fine tune, want to look for another opportunity, because risk is very small. If you want to plan your trade, maybe somewhere here you will be planning, and only this much risk you will bear, and anyway it is stopped out. Whatever the risk it is there, that small loss you will. So either way you can take a decision. That's why planning is always important. Hope you got the clarity. Always remember, 5 minutes high liquidity zones, many times it will give so many trade opportunities. As long as they give opportunities, we have to accept the trade. That way only we get maximum money from the high liquidity zones. But also remember, the 5 minutes high liquidity zones will be having an expiry period, that everybody should accept that. Okay, sale, how much profit it has given from here to here, because you took the trade and the revised zone you exited. This is the way sale has given 2,680 rupees profit, and which is 1.3% ROI. Because the margin cost is around 2 lakhs, so that's why ROI is reduced. But 2,680 rupees is a good money, but for your investment of 2 lakhs rupees. That point you should not forget. Anything, profit is a profit. This is the point you have to understand. Next one is LTTS. This is again another daily high liquidity zone. LTTS also, how to fine tune this zone, I already explained earlier. Here we have a rally 1, 2, 3, 4, 5 base candles, again a rally candle with again a hidden body, some more hidden body. This is the rally candle. This we fine tuned with 75-minute zone. We have a drop, 3 base candles and rally. Previously I explained how I fine tuned. This again fine tuned with 15 minutes time frame. So here we have a drop candle, 3 base candles and a rally candle. Again fine tuned with 5 minutes time frame. Already one of the earlier HLQ analysis videos I explained. We have a rally 1, 2, 3, 4 base candles and again a rally. And today what happened? This zone is completely violated. Easily violated. Okay, rarely we see such kind of fine-tuned zones will be completely violated. Rarely we see. This is one such kind of rare situation. So we have to accept this. At 10 o'clock, 15 minutes candle, 5 minutes candle, this happened. The same candle, entire zone is violated. So how much loss you got? You got 1.3%, sorry, minus 1.3% loss. That is 1,380 rupees. That is ROI is minus 1.3%, negative ROI. So this is today's stopped out trade. So whoever took trade in LTTS, you would have got a loss. This is a very good fine-tuned zone, but violated. We have to accept. Rarely we see such kind of violations, fine-tuned zones. Today it happened. Maybe the supply is much stronger than the existing demand in this zone. Maybe that could be the reason. Earlier pro gap is also there. From this pro gap area only, see, this entire move was there earlier. Definitely it should give a very good trade. Maybe institutions might have taken they have withdrawn their pending orders from this zone. Only in such kind of situations only. Institutions changed their mind. Whatever pending orders are there, they removed. In such kind of situations only, the zones will be violated. Why they took the decision? Maybe they have their own reasons. But it is violated. Entire zone is not violated, but fine-tuned area is violated. Maybe a new 15-minute zone might have been created. If that is the case, new opportunities it will give. Or a new 75-minute zone might have created within the daily area. So far, there is no 75-minute zone. Maybe tomorrow, again, they create a new 75-minute zone and further push. Again, in that fine-tuned area, next time we get a trade opportunity. That is the way we have to move further. And remaining stocks, how we fine-tuned, I already explained yesterday HLQ analysis video. Please refer that video. This is a Godrej consumer products. This is a daily high liquidity supply zone. Yesterday I have explained how we fine-tuned this zone. And today we didn't get a trade opportunity. This is today's candle. Next one is Indus Towers. Indus Towers, yesterday we discussed. We also got an aggressive trade yesterday. See, yesterday we got this aggressive trade. And today, anyway, today if prices entered into this aggressive trade area, we won't take a trade because it is already a tested zone. Once a zone is tested, we can't take a trade. If multiple times rejections are there from this zone, then we will plan trades in the future. See, there is a huge rejection. Let us assume today also it went and gave a huge rejection. Next time we will consider to plan a trade. Because multiple rejections from the same zone is a clear indication that institutions kept a very strong order flow. This is only one rejection from this zone today. We can't take a decision. It is a tested zone. We consider this as a tested zone. If anybody wants to take a second trade, it is own your risk. Why you cannot take second trade? I will show you another example in today's stock. Our trade plan is on this zone. It is having a fine-tuned 5 minutes area. But anyway, prices didn't go. And SBI Life. SBI Life also we discussed yesterday. Yesterday also we took a trade from this particular stock. See here, we have a fine-tuned zone. This is a 1 minute zone. So huge rejection, right? See the huge rejection. But today what happened? The zone is violated. We can't plan a trade. If multiple rejections, such kind of rejections, multiple rejections are there, then we can confirm this is having a very strong institutional order flow. Then future trades we can plan. This is only one rejection from this zone. For us, we consider this as a tested zone. Today it is violated completely. Go to the 5 minutes time frame, you get clarity. See today, this is completely violated. This is 1 minute zone. But yesterday it gave a successful trade. Because I remember some of you asked this question. Because rejection is there, you are thinking that same zone again you are planning trade. You should not do that. Lesson 21, we have multiple videos. One of the videos are aggressive trade setup. In that video, around 6 or 7 scenarios I have explained. One scenario is multiple rejections from the zone. I clearly kept the heading, multiple rejections. Maybe 2 or 3 rejections are there from this zone. Strong rejections. Next time we can plan a trade, believing that the zone is having a very strong order flow. Or if this is a high liquidity zone, we can take a second test, third test also, because high liquidity zone. Assume this is a 5 minutes high liquidity zone, 1 minute high liquidity. Anyway, our software, I limited up to 5 minutes level only, because 1 minute I am not processing, because processing up to 5 minutes it is taking nearly 11 to 12 minutes it is taking every day. If I include 1 minute, so many candles will be there. Probably the processing time may take beyond 30 minutes or 40 minutes. So that's why I limited the software processing up to 5 minutes. That's why up to 5 minutes level, the high liquidity zones we are identifying. If any high liquidity zone is there, you can take, suppose let us assume this is a high liquidity. You can take second test. Maybe it is not a high liquidity, it is violated easily today. But multiple rejections, see this is the first rejection. If you see such kind of rejection, one more strong rejection. Maybe third time you may consider. Still if you have any benefit of doubt, third time also if there is a rejection, definitely you can plan a trade in the fourth time until the zone is violated. How long? Until the zone. One day the zone has to be violated. See, every zone will get some expiry period, but we never know when it is. So that's why we try our luck sometimes, looking for the opportunity if the risk is small, even if our analysis goes wrong, still we should be able to bear that loss. So such kind of risk management we do always. Because before taking the trade, you know how much loss you are going to get in case if the analysis goes wrong. See, today we one stock we got 1.38%. Some people, see, 2% is beyond. We cannot go beyond 2%. It doesn't mean everybody should accept 2% risk. Some people will accept only 1.5% risk. Some people accept only 1% risk. Those people who accept 1% risk, today they would not have taken LTTS trade. Because before taking the trade, you will measure your stop loss and you will calculate the risk. If it is within your accepted level, you take the trade, otherwise you reject the trade. Or sometimes you will use, still you feel that zone is very important, 100% it will work, the confidence is there. Still, risk management point of view, you may do position sizing if the risk is beyond your accepted level. Those people who do not accept beyond 1% risk, today they would not have taken LTTS trade. Today it might have saved, their risk management might have saved this trade. They were lucky people. This is the way we should understand the concepts. Hope you got the clarity. And this is the HLQ analysis. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.